Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Let's start by taking a look at the daily chart. And what I see on the daily chart is you see this 100-day moving average. That's the blue line in this chart. And the price last week, early this week, moved up toward that 100-day moving average, but fell short of it. Back here in the month of October, the price did get a little bit closer to that moving average. Found willing sellers push the price all the way to the downside to our lowest levels for the year, and we broke below this trend line, as a matter of fact, in the process. And that break to the downside did fail, however, and we've seen a rotation to the upside with lots of up days through here. But the last 3 trading days since today saw a sharp correction back to the downside. Now that correction came down to the high of this swing area. Admittedly, this is a wide on the daily chart, but that's the daily chart that comes between 0.5860 and 0.59028. And as you can see, the low price yesterday and the low price today came down to the high of that swing area. Lots of different swing highs and lows through here as the market tries to digest what it wants to do. Does it want to keep the more negative bias, or did this failure right here lead to more upside potential? So that is a level that holding is something good for an upside potential. Now let's take a closer look at the hourly chart. And when we look at the hourly chart, where did this corrective move to the downside of the last 3 days take us? Well, it took us in between the 100-hour moving average, that's the blue line in this chart, and the 200-hour moving average, that's the green line in this chart. We traded above and below it, admittedly, on Tuesday and again on early Wednesday, but then moved to the downside. And as you can see, this is still moving to the upside, and so is a 200. But the low price came in ahead of the 200-hour moving average. We did break below the 50% midpoint of the move down from this high right through here to the low right here. It's easier to make that. That level comes in at 0.5913. And notice here that the low in the early European session did find support buyers ahead of that. So the buyers are trying to make a play. We couldn't get to the 200-hour moving average. We couldn't stay below the 50% retracement level. So we'll give the benefit of the doubt to the buyers in this pair with the 100-hour moving average being the next target on the top side to get to and through to prove that they can take more control. So that's what we're going to be looking for here in the New Zealand versus US dollar. Stay above the 50% retracement. We've played around with it enough already. It's time that if the buyers are going to take control, they need to stay above that level. So that's the risk on the top side. The target becomes the 61.8% retrace and the broken 61.8 and the 200 and the 100-hour moving average. Both are at 0.59468. Get and stay above that level, and the upside remains a preferred choice for the New Zealand versus US dollar. So there's a complete look at that currency pair. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.